It seems really silly when I see these home buyers sitting on the fence just for that little bit of difference in mortgage rate, or they're just wishing for market to crash. In today's video, I'm going to share how much money can you save when there's a half percentage point in mortgage rate difference. And there are a few ways that you can actually save money at a higher interest rate. And I'm going to share that with you. And at the end, I'm going to share about some of the current homeowners who need to upsize, whether this could be a good time to buy and sell at the same time or not. Hey, welcome back to my channel. This is Shawn the Realtor guy from Portland, Oregon. It seems so silly to I see these home buyers sitting on the fence when the market is softening, the price is coming down. The sellers are willing to do some negotiation, and you can actually control the negotiation as a home buyer. Now, without the exact number of how much money you're going to save, it's hard to really decide what you should do. I know a lot of home buyers are right now sitting on the fence. I want to see 5.5%, then I'm ready to pull the trigger. Or I need to see 5%, then I'm going to pull the trigger. Or I want the 2008 market crash, then I'll be ready to buy. I would say good luck with that because it's not coming. So before I go into the tips on how to save money with a high mortgage payment, let me kind of break it down for you how much money you're going to save. I'm going to give an example of $420,000 home price with a 5% down payment, which is $21,000. At 6%, your monthly payment is $2,392. And in entire loan length, you're spending about $462,000 in interest payment. Yeah, that's quite a bit of money in interest. Now, when we look at the monthly payment, when that rate goes down to 5.5%, that drops to $2,265. So right now we're kind of sitting between 5.5% and 6%, way more closer to 6%. The savings really is about $130-ish. And to me, this doesn't make a lot of sense because sure, it's nice to save $100 a month, but especially for those people who are renting and paying $2,500 a month and planning to rent for the next 2 years, it doesn't make a lot of sense because you could probably buy similar homes in Portland, Oregon by paying about $2,400 a month. Yes, there's a utility cost. Yes, there's a mortgage payment, the property taxes and insurance. It adds up. But I'm just looking at the principal and interest payment. And when you're looking at, $2,500 a month rent payment times 12 times 2, you'll be quite surprised. Let me actually do that. I meant to do that calculation. I'll do it in front of you. So let's see, 2,500 times that's 12 times 2. Do you see that number? That's $60,000. That's like close to 15% of the house that you can put down as. 15% of the home price. So when I see people, I met some like first time buyers at yesterday's open house in Wesleyan, Oregon. And they're like, yeah, we're just starting to look, but we're not super serious. And I said this, if the mortgage rate dropped to 5.5%, would you pull the trigger? And he goes, yes. In my opinion, you need to pull the trigger now because right now, you can actually negotiate on the purchase price because the market is soft. You could ask a lot of credits from the seller, so maybe they can help you buying down the rate or closing cost. And it seems like the majority of the consumers seems like acting like, I don't want to insult anybody, but acting like one of those like lambs or sheep. They're just following the national news trend. Market is going to crash, so I'm not going to do anything. You got to go to the opposite direction. When everybody's like, oh, I'm not going to buy right now. Market's going to crash more, crash more. Nobody knows when the market's going to crash or not. And nobody knows when the bottom is. And so if you are able to afford something like this, and you're paying something like that, on top of that, if you're staying in the city because you have a secure job, you don't have any plan to move, and you're paying $2,500 a month, spending about $60,000 in the next 2 years on that rent, which not even half, I mean, about half of that, like 1 year's of savings you can put toward the down payment and closing costs, and you can own something. This is where I'm like, why are these people waiting? It doesn't make a lot of sense, because I think this fall of 2025 is going to be the golden opportunity to buy, especially the first-time home buyers. So let's talk about how you can save money at a higher interest rate and still save the interest payment. I'm going to assume comparing between 6% and 5%, your monthly savings will be about $250 a month, between 6 and 5%. Again, basing on $420,000 home. Now, you can save that kind of money even when you have 6%. The first way to do it is if you just put even $50, $100 extra payment paid toward the principal, you'll be surprised how much fast you can actually pay that down and how much less interest payment that you have to pay. The better one might be if you pay your mortgage biweekly, you're going to be surprised, because there's one extra month, because you're paying like 13 months worth of mortgage payment, and then it reduces the compound effect of every other week, so that the interest is accruing a lot less every other month. And so, for example, if you pay $500 extra every month, you're going to change the 30-year mortgage to 17 years and 3 months. And you save about $120,000 in the interest payment. So yeah, I mean, does that make sense to you? That's kind of like similar to, definitely the total interest payment is going to be pretty big. I mean, that's saving almost like whole point when you pay principal $500 more extra a month. So to me, I'm not a big fan of one of those like 15-year mortgage, because it doesn't give you a lot of flexibility. What if 1 month or like 3 months you're in sales like me and your sales is down and you can make that 15-year mortgage payment? But instead having like 30-year mortgage, which is lower than 15-year, and whenever you have extra money, you keep paying extra toward the principals. So those are the two ways. You pay extra or bi-weekly, and I just gave you the example of $500 a month savings. Now let's talk about the sellers who need to upsize because you outgrew the home. You have one more kid on the way, and you just don't have room, and you need a home office because you need a home office, right? For the people who are going to upsize, market like this can be actually good. Because when you sell your current home, which is the first home that you bought, you're going to make money from the sale of that home, and potential loss of the market soft, you may get slightly lower offer, but when you buy a bigger property, you can save bigger portion of that big property, because it's kind of like higher savings on a higher price home. Does that make sense? Let's assume you save 5% on a smaller home and 5% on a big home. 5% on a big home savings is going to be much bigger. So but the challenging part is you need to be able to somehow figure out the selling time and buying time. And you need to know where you want to go next, what kind of home that you want to buy next, what kind of homes that you need to buy, and then you need to look around before you do anything. You need to have a good understanding of which school district, how big, what kind of layout, and you need to be able to see like 2 to 3 homes every week or so before you make that move, because then there's a higher percentage that you can actually find homes that you're looking for in a neighborhood by the time you list your home to sell and buy. And it is a skill in order to do two sales at the same time. I mean, your realtor has to be pretty sharp in my opinion, because like marketing time on the selling and buying, it can be pretty challenging right now. So yeah, I just wanted to say that don't be silly by just sitting on the fence. This is the market. This is the market that less people are buying, means less demand. Supply is increasing, so you have more options. Sellers are somewhat desperate, so you have more room to negotiate. I mean, everything's lined up, and I obviously didn't talk like this to that home buyer who came to my open house yesterday. I don't want to be that salesy guy at the open house. I just let him look at the house. They're not my clients, so I don't give this kind of advice. But I guess I'm sharing this with you. You're not my client. Maybe you can be my client in the future. But it is the right thing to share because you're listening right now. If I said anything like, hey, let me explain this to you yesterday at the open house, they're going to just shut off and they're going to just leave. I've tried that before. They don't listen to random realtors. But yeah, I hope that makes sense. If you have any thoughts about this, let me know in the comment section. But yeah, it's just one of those things I have to share. So just know your budget, know where you want to go. If you want to have a consultation in Portland, Oregon market, you should be able to find the link below, or you can find my phone number, which I'm going to tell you, 503-515-4499. Thanks for watching. Have a great week, and I'll see you in the next video.